past, medical aids worked like this. You paid a certain amount of money in a month, and then you received fixed benefits, of which could have been including hospital benefits, doctors, optometry, dentistry, and medicine. These benefits were limited either by a rand amount or an amount of visits, consultations, or usage. Somebody realized that they are paying for benefits that they do not use. And medical aids realized that people tend to use benefits just because they're paying for it. So someone decided, why do I have to pay for dentistry if all I need is medicine? And that's when the new generation schemes were born. These new generation schemes work like this. You pay, and all they commit to cover is your hospital expenses, but without limitation. Everything included. However, in order to keep the cost down, everything happening outside of hospital is basically self-funded. They do assist you by ways of a medical savings account and some other additional benefits. The new generation schemes basically consist of two benefits. On the one side, you have in-hospital cover, and on the other side, you have out-of-hospital cover. In-hospital cover should be funded in full, maybe with some sub-limits specific to certain procedures, and maybe restricted to a network, and maybe a stay in hospital is limited for certain procedures. But yes, otherwise, no rand amount upper limit should apply. Out-of-hospital benefits, however, everything that happens outside of a hospital, like medicine, consultations, pathology, radiology, optometry, dentistry, even an emergency visit that does not lead to an admission to hospital, everything will either come from your pocket or from your medical savings account or the day-to-day benefit that's offered by the plan you choose. When you go to hospital, your hospital account will not be the only bill you receive. There are accounts that they call related accounts. And these accounts include your doctor's bill, anesthetist, radiology, pathology, whoever needed to work on you whilst you were on hospital. These accounts are sometimes not covered in full by your medical aid. It all depends on the plan option that you've chosen, which covers either at the medical aid tariff or at a private tariff. It could also be network dependent, and you pay a penalty if you do not use the network that you should be using on that specific plan type that you've chosen. And that is why it's important to make sure you understand your plan option and make sure that your hospital cover is in line with your expectations. Sometimes the hospital option on the medical aid also includes preventative care benefits, and they pay for that from your risk benefit. So you need to make sure that you know these benefits so that you can use them. Also, cancer cover will be included, although mostly limited, so make sure that you understand your cover. All medical aids have to cover a certain amount of conditions called prescribed minimum benefits, and their cover will be similar on all schemes except for the fact that networks could be limited, and you might have a list of medication for the specific condition that will apply. You also won't have this cover automatically for chronic conditions specifically. You might have to apply for the cover and qualify for it based on the severity of your condition. So don't assume that you will be covered, and apply. Maybe that you qualify and they will pay for it and you don't have to pay for it from your day-to-day benefits. Out-of-hospital cover will depend on your need. If you don't need any cover, you could possibly get away with just a hospital plan. If you do need cover, you need to choose a plan that aligns with your needs, and to determine that need, you need to calculate what you spend on out-of-hospital expenses every year. because these benefits are calculated annually. So you'll have to look at things like medicine, doctor's visits, optometry, dentistry, things like that, your usage in a year, and that will determine what plan type you need to choose. That will give you a certain rand amount in your medical savings account that you can use for claims for all your out-of-hospital benefits. And when this is finished, you need to pay it from your pocket. Some plan options offer an additional benefit above a certain amount called a threshold, and you have to accumulate to that amount, and those expenses will still come from your savings account or your pocket. And once you've reached that amount, that threshold, the above threshold benefit will start, and the scheme will continue to pay the rest of your expenses for that year. So if you're paying for that benefit, make sure you get to that threshold and you use it, or you're overinsured. Or if you need more cover, make sure that you will use that benefit enough to justify an upgrade to a plan with the threshold benefit. Another thing you might want to consider when choosing your out-of-hospital cover is your cash flow. If you have a large amount of cash flow available every month, you might not need such a large insurance amount, because usually you cover your day-to-day medical savings account premiums from your pocket, and rand for rand is what will be available to you. And the only difference between that and saving in a normal bank account is the fact that you get the money available upfront for the year, whilst in a bank account you will only have available what you've saved. So think about this before you commit to too much cover without needing it. And then lastly, consider the tariff at which you purchase your out-of-hospitals, things like medicine, the doctors you visit. If you use contracted-in providers and you buy generic medication or medication that is at the medical aid tariff, your savings will last longer and you will have less co-payments. Choosing a gap cover, apart from just the price, the thing you want to look at is the percentage of cover, because that will all depend on what plan option you chose with your medical aid. If your medical aid only covers at the medical aid tariff, you want to make sure that your gap cover gives you at least an additional 500% cover. Less than that will take some effort from your part to make sure that you use network providers. And when you're in an accident, you can't really make that choice and do that homework. Secondly, the thing you want to make sure is that you're not overinsured. So if you are on a medical aid that only gives you hospital cover, the gap cover option with additional day-to-day benefits won't help you, because gap cover can only pay where you had a shortfall on a benefit payment from the medical aid. So if you don't have a medical aid benefit for it, the gap cover will most probably not be able to pay either. The second thing you want to look at is additional benefits, because some gap covers do offer some benefits that they call additional stated benefits, like additional cancer cover, things like that, that could make a difference between your choice of medical aid. Last thing I want to say about tariffs is that if you are on a plan option that covers more than just the medical aid tariff at your medical aid, you could consider a cheaper gap cover where they only cover an additional 300 or 200% cover for your shortfalls in hospital. When you have a shortfall on out-of-hospital benefits, it means that it will come from your pocket. Because either your medical savings account has run out, or you have not reached your threshold benefit yet, so you can't rely on that scheme's additional risk benefits. And then you'll have to fund it from that emergency fund, which I hope you have been saving up towards. But yeah, shortfalls for out-of-hospital cover, there is no other way to fund that other than just paying for it from your pocket. Just remember that the whole funding of your medical savings account is basically coming rand for rand from your pocket. So you're just extending that pocket a little bit. And the medical scheme helps you by providing you with the full value of your monthly premiums into your savings account upfront for the year. Your medical aid will probably not fund long-term illnesses like cancer, etc. comprehensively. You might have shortfalls or co-payments. And for that, you can use gap cover, but it might not be sufficient. The thing you need is severe illness cover, where you will receive a lump sum, and some companies offer an income, but a lump sum mostly that you can use to buy large expenses like wheelchairs or upgrades to your property or your car that might be required in this instance. You could also look at sickness cover or temporary income protection on your disability part of your insurance policy. This will help with short-term illnesses where you're off for a period longer than that your annual leave or sick leave would cover, but too short to really qualify for disability in total.